There are a lot of things that need to be improved on in our system to ensure that government don't continue to crowd out. And when we also look at the amount that the government is to borrow this year, it's huge. We have a budget of about 68.5 trillion, deficit of about 31 trillion. Yes, they're not going to take all those deficits locally, but at least 40 to 50% of that. So definitely the government might come to the market this year needing close to 12, 13, 14 trillion.
Welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will be discussing and x-raying the capital markets in 2026, the optics, nuances, and expected outcomes. Joining me to discuss this is Mr. Damilare Asimiyu. He's the head of investment research at Afrinvest. It's great to have you, Mr. Damilare. Thank you very much for taking out time to receive us to have this conversation.
Thank you.
Let's first begin with the first 5 months of the equities market, with this part of the capital markets. We've seen the pivotal role it played in the recapitalization exercise for banks, raising over 4.6 trillion naira, and also how it has been able to achieve over 100 trillion naira market capitalization, which is quite remarkable. Looking at that, how would you assess the market depth, breadth, and also the outlook for 2026?
Once again, thank you for having me. So there are a lot of things to unpack from your questions.
Yes, definitely.
The first part is looking at what the market has done within the first 5 months of this year. The market closed 2025 with a market capitalization of slightly below 100 trillion. Now we're at about 160 trillion. So meaning that the market has gained roughly 60 trillion in 5 months. If we put that in percentage, that also amounts to about 59.7. That is remarkable. At the beginning of the year, when we published our outlook report, our base case projection for the market, looking at some parameters, is that we thought we estimated the market would do, in the base case, about 44%, and in a bull case, about 88%. So with the current reality, the market has outshot our base case, but it's still below our base case. So that speaks to how remarkable. And when we compare the performance thus far, of course, the year has not ended, and we think the market can still do better, especially because there are other positive triggers that can support growth. If we compare the half-year performance to, let's say, over the last decade, these first 5 months can be termed as the best thus far, because in 2020, the market did 50% for a full year to rank. Then Bloomberg ranked Nigerian market as the best performing market globally. Even with the pandemic, Nigerian market did 50%. In 2021, it did about 6 point something, 2022, 19, then it followed with 37, and last year, another 52. So definitely, the first 5 month performance for the Nigerian market is solid. Now, when we then move a bit to the other part of the question, talking about the debt, a key measure to assess the debt of the market is, of course, there's no uniform standard globally, but there are parameters that can use to gauge it. So how liquid a market is, that's what gives us a sense of the debt. Now, if we use average daily volume traded of about 500,000 units upward, I'll tell you that we have less than 35 stocks or 35 companies listed on the exchange out of about 160. Only about 35 pull that kind of numbers every day. So roughly 35 companies trade volume more than 500,000 units. So meaning that in terms of debt, Nigerian market can still do better. It's not up there. 35 out of 160 is less than 10%. Then when we talk about breadth, using last year and this year as an example, breadth talks about how many stocks have gained and how many have lost, or how many have not even changed in terms of price. When we talk about the breadth, I think the breadth of the Nigerian market now is very strong. Year to date, we have about 96 stocks that have gained, just barely under 35 have lost, and the others, maintain their year-end position. So definitely, the breadth is strong. Same thing last year. Now, when we then talk about the outlook, just like I mentioned, our initial expectation for the market this year is that the market will do nothing less than 44%. And our optimism was born of the fact that many of the reforms, the impact of some of the reforms, yes, we have the ones that are, that have created pain points on the economy. We need not to shy away from that. But there are some that have impacted the economy as a whole positively. So the removal of capital control measures, the payment of backlog, the improved transparency with the central bank, the improvement in terms of turnover time in the market. Now we have a T+1 mechanism. All these factors have stimulated investors' confidence and is helping to improve the numbers, because prior to introduction of capital controls in 2020, Nigeria normally have foreign investors' participation up to 50% on the market. But the moment the central bank governor then introduced capital control measures, foreign investor participation thinned out to as low as 14% at some point in 2022 end. But as of last year, we are seeing foreign investors coming back, to a large extent. We are now having them close to 27, 28%. So all that, and increasing sensitization locally, because if you then look at the demographics of people, that are participating in the market, that's very interesting. You now have a lot of young people, because the process has been decentralized. You have a lot of institutions that give access to people to trade on their app. Some 5-6 years ago, we can only count few number of houses that has app. But the game has changed now. Here in Afrinvest, we have at least 2 apps that can give people access to trading in the Nigerian market. We have the Plutus New, we have the Afrinvestor, and some other players like that. So that democratization process has given access to a lot of young people. And when you look at Nigerian population, over 235 million, more than 45% of that are youth between age of 18 and 45. So you can see the large number of people that have been attracted. I'm not saying all of them, but a bulk of them have been attracted to the market through seamless channels like that. So these are the things that are driving the market and will continue to drive the market, especially as the macroeconomic fundamentals continue to support attractions.
Thank you very much for the insights on the equities market. A lot to unpack, particularly how technology is transforming the opportunities to scale the market breadth and depth. It's really important at this time. Let's look at the fixed income market in 2026. We are aware, of course, federal government borrowings has been there, but the big question is about the crowding out effects. How do you assess the market, private sector being able to assess liquidity and leverage the market?
Sometimes you don't just look at the number on the surface. You want to look at the intricacies that shape the number. When you look at CBN data on private to government sector and private sector, you'll be amazed that in the first 5 months of this year, credit to the private sector, the growth in credit to private sector is higher than that to public sector, about 103 to the private sector compared to 80% to the public sector. But when you then go deeper, you then ask yourself, at what cost were the private borrowers borrowing? And that's where I feel the crowding out effect is actually still there. Using treasury bills as an example, the longest tenor instrument, 364 days, the average price in this year is around 15.7%. That's the amount the federal government is borrowing for a whole year. But an average person, let me not even say an average person, let me say a credit-worthy person whom the CBN tagged as prime lender, a prime lender will have to cough out as high as 19.8% to borrow, where federal government is borrowing 15.7%. Now, maximum lender will do 35%. Who are the few people? Because when you talk of prime lender, only few people tick the boxes to be a prime lender. Talk of the likes of Dangote and what have you. But majority of businesses, majority of private players will have to borrow at a premium above MPR. The MPR itself is 26.5%. So an average business person who doesn't have the kind of financial muscle, or should I say the credit credibility that borrowers like Dangote has, will have to pay nothing less than 28, 29%. Yes, they are taking a lot of fund because that's what the data is showing, 103% growth in credit to the private sector. But at the cost they are taking it is very high. And the implication of that is ability to create job will be very difficult, because imagine me taking 100 naira and I have to pay interest of 35 naira within a year. I'll prioritize cutting other costs to be able to offset that, because I also want to make profit. But imagine if I only need to pay 9% or 5%. It then means that I can think of expanding my business easily. I can think of engaging more people, rather hiring more people to create jobs. So I think that's the systemic problem we have here in Nigeria. Yes, the credit is there. The credit has been disbursed based on the number, but the cost of credit is still very high. And that is crowding out private sector, because only few private sector players can play in that category. Because if you need to go to bank and pay 27, 28%, definitely, even if you are doing commercial paper, and of course, there's a certain level of business that can even do commercial paper. A small business or a retail business that doesn't have books, good books, cannot do commercial paper. So there are a lot of things that need to be improved on in our system to ensure that government don't continue to crowd out. And when we also look at the amount that the government is to borrow this year, it's huge. We have a budget of about 68.5 trillion, deficit of about 31 trillion. Yes, they're not going to take all those deficits locally, but at least 40 to 50% of that. So definitely the government might come to the market this year needing close to 12, 13, 14 trillion. So the more the government is mopping those kind of liquidity, the more the private sector are forced to go and take credit from those expensive channels. And that will continue to affect the distribution or the extent to which our growth is impacting on the majority of the economy. But I think these are things that the CBN and the policymaker need to look at critically, such that government borrowing will not be crowding out the private sector. And they can do this by creating special window for those in manufacturing, for those in agriculture, for those even for artisans, where they can borrow at relative cheaper price to ensure that our growth is inclusive of every member of the economy.
Special window. It's interesting. The central bank governor has this focus that we're not doing development finance. The DFIs already, those ones will be capitalized, but it's going to be something that will be extremely better. You want to just say a bit, just 1 minute on that?
We have DFI, but the question is, for instance, locally we have what we call Bank of Industries.
Yes. Development Bank of Nigeria.
Yes, Development Bank of Nigeria. But what is the strength of their capitalization? What was the size of the liquidity they have to disburse? So to drive, MSMEs and the manufacturing in Nigeria, you need multiples of trillion credit available in that scale. So if we don't get to that level, where every time we reference China as the industry of the world, as perhaps say for military prowess and what have you, you could have rated them as the biggest country, the biggest economy in the world, because their GDP is almost catching up on that of the US. What have they done? They made credit available, to their production channel over the years at affordable rates. We must do that. We must be deliberate. So we have DFIs, we have the Bank of Industries, but their capitalization is very lean. So they need more capital. So the more the government is able to, because it's law of demand and supply, when those DFI have large sum of money at their disposal, they can then add so many sectors and say, you know what, those in the textile industry, we have 10 billion to loan to you people at a single digit interest rate. They look at those in art, they look at those in agriculture, and that is the only way we can. So we need to pump more liquidities to those people. Government needs to be deliberate with the kind of capital they have so that they can impact the economy significantly.
Very interesting insight on the physical market and the cost of capital. What you just said has also triggered a point I'd like to raise. Proshare, we've been strong advocates of government leveraging the capital market. I don't see any developed economy that is really impactful, that does not leverage its market to unlock value from its state-owned enterprises like the Nigerian National Petroleum Company Limited, or even sell some equity in the Nigerian Liquefied Natural Gas Company, or even some of the massive estates. This office here is in Ikoyi. There are real estates that are lying waste, idle assets that can be. And they are under the purview of the Ministry of Finance Incorporated.
Of course, some are in Obali.
Yes, and Bureau of Public Enterprises are involved. We've not seen that traction expected. What do you think needs to be done at this time to accelerate this whole process? Because there's so much value that can be derived from this approach.
It's very unfortunate that 3 years down the line, when you look at some of the plans of this current administration, in 2023, they are very lofty. I know there's one of the policy documents of the government that I read in 2023, where they, in conjunction with PwC, mapped out, government assets that have not been unlocked or they have been abandoned And the estimate then suggests that the government can get up to 200 trillion if those abandoned assets or those public enterprises are being enhanced. So it's not that we have not identified some of them, but the mechanism to drive how to unlock the value is what is missing. And how can it work? You just mentioned NNPC is one of the GOEs, government-owned enterprises, but we need entities like MOFI. We need more entities, or let me say, we need more empowerment for entities like MOFI, which is Ministry of Finance and Corporation, to have maybe subcommittee or other SPV, right, that will strictly focus on how to, some of these assets need to be privatized. Some need to be sold off. Some of those real estate assets along Obalende and so many other places that are scattered around, if you give it to private owners, you having a PPA arrangement to turn them around within a certain number of years, you will see the value. Enugu did one thing that is very interesting with is it the Nike Lake? Because I served in Enugu.
Nike Lake Resort.
Yes. I served in Enugu over a decade ago. The resort was nowhere to be found and everything. But the government partnered with the private sector for a certain number of years. If you go there now, you will be amazed by the sort of turnaround, and they have not fully optimized it. So these are the kind of mechanisms Nigeria needs to do to optimize those value for the real estate. Now, for entities like NNPC, NLNG, and even the NIPOST, we need to improve digitization. I'm very impressed with the executive order now of the federal government that compel NNPC to remit all their earnings. Since the month that policy became effective, we have seen massive, improvement in what eventually hits the Federation account as net inflow. No, you can imagine if we have been doing that since 2022, for instance, when we had the Russia-Ukraine war pushing oil price up, and then we're producing more now because now, even though the oil price is high, we have a production problem. We have average production of about 1.55 million barrels per day when budgeted number should be 1.84. Then we're doing close to 1.7, and oil price was above $120. So assuming and again, then inflation was also not high locally then. So assuming we have a sort of policy like that forced NNPC to be more, more accountable and more productive, it will have helped the Federation. And so the point I'm trying to make is that many of the government revenue generating entities or establishments, we need to block leakages. The biggest problem is leakages, and enhance their effectiveness through improved management. More importantly, digitize them. When you digitize those channels, it helps reduce leakages, and so they'll be able to bring in good revenue for the government, which will tell on the Federation account, which will also help in driving the economy. And for those assets, whether they have been unlocked before or not unlocked before, power should be given to entities like BP, Royal Public Enterprise, and MOFI to manage them well, get private sector people. I've just given an example of the Nike Lake model. You'll be surprised at how Nigeria can turn its fortune around in a very short time.
I think the way you said it, you just affirmed that we need to work quickly on the deal book of the MOFI. We need to expedite action on
it.
Thank you very much on that. Now let's look at the T+1 recent milestone achieved by Nigeria, 24 hours settlement cycle for market transactions. How would that change the market landscape?
I mean, the first thing that progress, I call it progress because the Nigerian market has evolved over the years, and the sort of transformation that the NGX, or let me say the Nigerian capital market has achieved in the last 6 years is even more commendable. It tells you the level of commitment of management of NGX, SEC, and the central bank also on one hand, because when you look at some of the development that has happened, right, the CBN introduced the bid match technology in 2024 November, which enabled people to, you apply for FX and do everything on time, and you can see the buyers, you can see the seller, which help converge rate. The NGX improved technology adoption. If you recall, so many IPOs were done last year where people were subscribing to IPOs on their mobile. It doesn't work that way before. You have to go to a brokerage house, carry a lot of documents. It's very easy. The upcoming Dangote IPO that everybody is looking forward to. Here in Afrinvest, we have built an app. We have created the capacity on all our apps such that When the IPO is out, you subscribe from that. So the point I'm trying to make is that the T+1, the first feeling it gives to investors is that Nigeria is moving in the direction of advanced country, because only in advanced country you see that kind of rapid turnaround time like the US market. So it also has the capacity to help strengthen liquidity, because if you know that you can buy today, you can trade, and when you want to turn over, you won't need more than 24 hours. It stimulates confidence, it stimulates interest. You are not trapped at any point. I think the only problem, or let me say the only downside now that needs to be addressed to further support the positive impact of that T+1 is for us to stabilize our macroeconomic environment. Once we do that, we will attract significant investors. Currently now in Africa, Nigeria's capitalization to GDP rank below the, I think, fourth position. South Africa over 200, Mauritius over 61, Morocco over 48, Nigeria about 36. But if the macroeconomic environment is stabilized, I tell you, in the next 1.5 years, Nigerian market capitalization, which is about 120 trillion now, to GDP of 441, would shoot above 50%, meaning that we'll be having market capitalization of above 200 trillion in the next 12 to 18 months.
That would be remarkable and something very important to achieve. Let's look at 20 years ago, 2006, the market, just like this, was on heights. Everybody was just excited. I remember those days too. I would jump on and get shares, and everybody was just talking about the market. But of course, you saw what happened, the implosion in 2008. Looking at this trend now, the heights we're achieving in 2026, going to 2027, do you see any retracement in 2028?
To contextualize it, one will need to look at what are the things that led to the market bust, because there was a bubble and there was a bust. Yeah, so there was a recapitalization in 2005. Banks were so liquid that they were underwriting, shall I say, delicate credits. And also, valuation was unnecessarily pumped up. So that then coincided with when we have global meltdown time, because crude oil price collapsed then. But when you then compare that time to now, you look at how the recapitalization exercise has gone this time around. First and foremost, the CBN had rolled out some policies that have even compelled banks, to maintain some checks and balances. Recently, there's a policy from the CBN that says banks that are still exposed to forbearance should not pay dividend. Those are some of the gaps that were not covered in the 2025 recapitalization. So then, and again, even this time around, what was defined as their capital is not what they defined as capital then, like the qualified capital. Then it was just everything. But now it must be share premium and ordinary shares. So the CBN ensured that tangible capital were brought in. Then they did recapitalization, but there was also a lot of book mending. So I think we have picked some lessons there. And also with the strong oversight of the central bank now, it's going to be very difficult for any bank to create entities, because one of the things they did then, because those banks have so much money, they're just creating entities that are not sustainable, like subsidiary entities, and everything just collapsed. So I think the current government, governor of the CBN and his team has picked lessons from that. Then when you look at the other dynamics, crude oil price bust is not seen on the horizon in the near term, right? The reason is that we have a global economy that, though there's been a push towards cleaner energy, but some of the recent events that has happened globally has suggested that the need for fossil fuel will still remain. And the sort of interconnections that existed then between countries, whereby the financial issue in one country will quickly spiral to another, has been largely addressed to a large extent. So there's been a sort of decoupling, not completely, but largely, So the sort of relationship with countries have reduced a bit. For instance, throughout everything that happened 2020 to 2025 globally, Nigerian market was just booming. In 2020, there was COVID. There was no COVID for the Nigerian market. It gained 50%. There was Russia-Ukraine war in 2022. Nigerian market pulled 19%. So, and when we talk about the numbers, we have about domestic players account for almost 80%. I'm not saying foreigners should not come in, but more of domestic players are coming in. So that sort of connection. But then we have foreigners account for 50%. So it was easy for the market to crash. It was easy for them to take their money. And that is why, before we came on set, we were discussing about the capital importation number. And we mentioned that, bulk of it is into FPIs. And that's why I said then that it will also be good for us for the government and for policymakers to ensure that we pivot from FPI center, being an FPI centered economy, to an FDI centered economy, because those are the kind of things that can trigger capital flight and collapse the market. But the good thing is that the flows to the equities market from this FPI is narrow. Bulk of it is money market. And largely, it is assumed that government cannot default, especially because it is a domestic currency. So looking at some of those dynamics, I think we're not likely to have a repeat of what happened in 2008, because the capital raise now, the bubble now, are largely fundamental.
Okay, very interesting. Now, you mentioned initially, I said you should just hold it there. We'll talk about it now. The IPOs, the initial public offering. We're going to see some big green lights. The Dangote Petrochemical, that's going to be massive. Everybody's gearing up for it, including your firm and other players in the market. And of course, Bank of Industry anticipating them also, and then others from the third quarter. So how is this going to also, like you said, push market capitalization, deepen the markets, and attract more investors into the market?
Even though I don't have the numbers for the BOI, what the evaluation could look like, but for the Dangote refinery, the surface value we have, we know the refinery itself is valued at about 20 billion, pre-operational. Now that it's operational, the valuation should be around $38 billion. Now, Dangote is planning to list just 10%. 10% of a $38 billion valued assets or business is about $3.8 billion. 3.8 billion in Naira now will give you close to 15-16 trillion. If you had 15-16 trillion, that's at inception, as of listing, just like MTN listed in 2019 at 90 Naira or so. You can see the number and almost 800 just 6 years later. So at the point of coming in, Dangote will be bringing a valuation of almost 16, 17, 18 trillion to the market. That eating the level we currently have already is taking us to 200 trillion level that I talked about. So imagine you then have the BOI, you then have more other entities coming in. What you will see is that Nigerian capital market capitalization to GDP will raise towards 50% level. And it will also help stimulate a lot of young investors. They may not have the financial strength, but they have the volume. And it will help improve both our financial literacy, saving culture, and strength of currency and investment environment. So I think that some of those upcoming listing holds a lot of potential. And again, a lot of foreigners will come. They'll bring in their dollars, so they'll remit their dollars with the CBN, then take up our shares. That also helps strengthen our foreign reserves in one way and give us a good balance of payment. So definitely, the Dangote listing, Dangote Petrochemical listing, and some other ones. Don't forget, Buatu is also building its own. So by the time that one too is ready, say 2027, 2028, we have a lot of prospects in this country. What we just needed is stable macroeconomic environment, addressing security, ensure public assets are put in place, let Nigeria be attractive from, infrastructure perspective and security. Then the rest will be a path to greatness for the economy.
Path to greatness. And in concluding this very interesting conversation, the Capital Market Masterplan 2.0 is on the offering. The Director General of the Security and Exchange Commission, Dr. Momotimi Agama, talked about it. Let's anticipate around July that will be formally unveiled. And he talks a lot about digitization, talks about supporting economic development and driving the economy. As a market stakeholder, analyst, watching the developments between the market and economy, what would you like to see deeper in this plan that would ginger the markets to drive their economy?
Let me start by saying that the SEC has been doing a human job. I mentioned it that the last 5, 6, 7 years, Dr. Agama is a friend of the house. And they've innovated a lot of ideas that have supported the market. Was it not just last year that they also came up with the framework to accepting digital assets? So they have a robust plan for the market. The SEC and the team and the capital market managers as a whole, they are visionary, and their plan or programs are in line with the global dynamics, especially in countries where financial inclusion and growth is getting deepening. So what I expect, or one of the things I feel they should also, or they might add to this, their plan to make it more better, is also to have special plan for, most of the companies that are listed on the NGX. When you look at the criteria to list, yes, we also have the NASD, where they will say if a company does not meet the NGX, can go to NASD. But yet, our economy has not ripe to that extent whereby a business of just 5 million naira can have, yes, we have a growth board on the NGX, but when you look at some of the criteria to the growth board, many of them cannot meet it. We have a lot of...
You used to have the authentic securities market, the authentic market for small businesses. So it needs to be revamped.
Yeah, it should be revamped,
and
because we
NGX
have
level.
a lot of businesses in the MSME categories. So the more we bring these people to the spotlight, the more we help them to, because what they just need to have is to have a proper books. The more we are able to encourage them to have proper book, then they'll be more disciplined. As they improve on their discipline nature in terms of managing their books, managing their revenue, their capacity will grow. They'll be able to, deliver more value locally in terms of creating product, job, and able to import. We now have a lot of windows for Nigerian businesses to import, but they need a platform that will encourage them to list, to be visible. Because one of the things that listing brings to a business is visibility. There is nowhere in the world today, you mentioned Dangote and Dangote Petrochemical, even though it has not listed, but it has other entities that are listed. So that visibility is there. So the more we create that platform, and now that the world has moved to a digital world where everything is very mobile, we need to include that into that plan. And I believe the sky is just the starting point for the Capital Market Masterplan in terms of the impact it will have on the economy as a whole in the near term.
Mr. Damilare Asimiyu, Head Investment Research, Afrinvest. It's been interesting discussing, x-raying the Nigerian capital market in 2026, looking at the optics, nuances, and expected outcomes. Quite insightful takeaways, which we believe will be sort of the engagements we'll be having to see how the market continues to pivot economic growth. Thank you once again for the time, and I appreciate it. Thank you very much. Thank you. That'll be all for this edition of the Economy and Politics Conversation. If you want to get further insights on this, log on to our website displayed on the screen and follow our social media handles. In this period, we from Proshare and of course Web TV would like to speak to our country in these trying times to say no to normalization of insecurity. We call on government and all stakeholders to do everything possible to keep our nation secure. Children, women, and the entire citizenry lives are valuable, and we pray for a peaceful, strong, vibrant country where everyone can live peacefully. To come your way again, I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.